Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 21st of March. Right now, the year's almost skipping away from us. Now, I'm just starting with the charts just to give you a bit of an overview of what's going on. The dollar index, we can see the dollar really isn't doing too much at all. If anything, we've seen euro come back. I've had this yellow sort of horizontal line here around 111.19. Keeps coming back and testing that. It looks like there's unfinished business and stops above that 120 level. It looks like for all money, we might see that, or it's just a very short-term little flick up and straight back down, because what we're seeing is oil's sort of broken down and then coming back as the fighting between the Ukraine and Russia continues, right? It's dragging on. We thought it might sort of roll over, but it hasn't done that, right? So that's one part of it. And this is the other sort of confusing part is the rally in equity markets, right? So the S&P off that support level and the NASDAQ back above that 200-day moving average has just sort of been put down to a potential deal being done between Russia and Ukraine, right? So this is the hard thing about geopolitical events. You can get different things attributed to different parts. The oil move, it's a reality. Oil is a little bit higher because they haven't stopped fighting, whereas the whole situation around this little bounce in equities is around the prospect of a deal, which tells me if they do a deal, we start to see equities come off again, right? Obviously, it's going to be more interest rate related, but tricky to say the least. Bitcoin, as far as the cryptos go, pretty good big ranges, right? But not really going anywhere just yet. And gold has got a very nice, tidy relationship here with oil at the moment, although it hasn't really bounced as hard as oil has. So that's where we are on the sort of the global markets, right? So if I just bring you back to the global data itself, here's the equity move from Friday. Now that's Friday, right? So that's sort of factored into the market. What we're looking at today, there's if I just come over here to the news page, you always get a fresh round of news. There's a bit more update. Russia and Ukraine continue over the weekend, so that sort of sparks the market a bit. Now, what we're starting to see is a few opinion pieces, right? So Tokyo, and I was just reading a few articles, they're like lacking news, right? They're lacking the data. We saw the Fed last week raise rates. Maybe their hawkish stance was already factored in. It appears that way. Bank of England, they hike and go sort of pretty much neutral. So we've got a bit of a mixed reaction here. Now, what can you do about this? Well, let's just follow the market, what we can see. Right. So if I do come back to the global markets page, the global data, okay, US equities a little bit lower, right? What should that do for us? Well, in normal market conditions, it's a risk-off profile. And that's actually what we're seeing here, except for Kiwi doesn't want to dance, but it's only up 0.1. We're seeing the Euro, Sterling, Aussie and Kiwi dribble off and the dollar pairs rally, right? Nice, easy profile to start with, right? I like this. It gives me a little bit of confidence that the markets are starting to connect and behave quite orderly. Okay, the safe havens, dollar Swiss and the yen, really, doesn't seem to be any safe haven status with those pairs. Tells me that the market is very comfortable with the way the Russian-Ukraine action has developed. There's always that shock and awe at the start, then it subsides, and now we're seeing the tail end of that sort of conflict. If you're looking for something as far as oil goes, because oil is hanging in there, right? This is quite an interesting one. I have actually added Chevron and Exxon shares, right, to this whole profile. Now, year to date, this is up about 60%, I think at one stage. Chevron was, or 48%, I think it was. Anyway, it was much higher than where it is. A few bit of a drop there in the share value, pretty volatile. That's sort of more related around the conflict coming back online. Don't forget we had OPEC, I think it was in Iraq, saying they're going to release more supply. That sort of takes the pressure off oil as well. But you can see oil's still up, right? Until we get that final resolution from the markets, right, or from that issue, it's going to continue. And if I just flick over here to have a look at the major currencies, see what's going on there, you can see that dollar index just sort of jamming away in between these sort of pretty fickle sort of trend lines at the moment. No major action there. But once again, if I just come across to the charts, one of the interesting ones Actually, I'll just come over to these other two charts because it's a little bit more of a clearer picture. You can get a bit of an idea what's going on here. So just at euro on the hourlies, okay, we've got a new high here from Friday. So redrawing the trend lines, we've got resistance above 111, support under 110. And where are we on the big picture? Well, we're right at this pivot point. Put it down as 111.20. That sort of seems to be the balance of power at the moment. But I can tell you what, there'll be a lot of people queuing up to sell euro on a rally. It's the fact is we're a couple of weeks into this dip, and this is where when you have a trend line like this, the market will start to sniff out the stop losses if there are some up there. So what we need is you come back to the overall, what's going to drive it there? Well, if it's not the geopolitical news, it's the fundamental data. So I'd be looking very closely for US numbers or euro numbers. We need strong or weak US numbers, I should say, or strong euro numbers to get it going. In actual fact, we've got a cartload of really high impacting UK data, CPI, PPI, retail sales as we go through the week. You can probably check out the consumer confidence numbers. I can't imagine they would be any good out of Europe at this point. Some German numbers. As I said, you get some more PMI numbers there out of the UK. Then we hit durable goods, right? Pretty good historical number for as far as the US numbers go. The IFO, okay, this is probably something to keep a very close eye on. Later in the week, the IFO numbers out of Germany, pretty good historical, strong numbers. And then we've got the University of Michigan sentiment numbers there at the end. So sterling's going to be a major focus. So what I would be doing is really tuning into your sterling charts, either the majors, as in sterling against the dollar, or go to sterling against the crosses. There could be some more play here. This thing is, I just won't get involved. It's like weak, and it's directly related to, I mean, you can see how much cash the Russians had in the UK. Now that's all been lifted out of there, and it's left the sterling rather looking a little bit of like it's got a bad hangover. The rest of the pairs, well, you're getting dollar Swiss. I think we've had the stop loss run there in dollar Swiss. Dollar yen just keeps going. Coming back to support here on dollar CAD. Now, oil is coming back a bit, but I think the next move, we see oil drop below $100 again. You can be sure dollar CAD's going to go with it. Euro, Euro's got to be on your hit list because that's such a good level there. Even if you're not sure whether to go long or short yet, the level is the key to it. So you can actually see how it reacts around that. If we see the spike up, I'm still sort of a bit bearish. Well, the data's gone a bit stale there and off again. Aussie and Kiwi, well, to me, they're out of the game at the moment. They don't even want to play. And the same as sort of like sterling. Sterling's just on its knees but won't dance. And Euro's got the best technical setup. Maybe gives us an opportunity around that level. As I said, do we go short or long? Well, I'm not sure just yet, right? You have to see what the fundamental picture is as we go forward. And that's how you can make a pretty good judgment on that. So the week, it's the last week of the month. You're going to have a lot of central bankers talking from all central banks. It's pretty common, right? They wheel them out at the last week of the month, as we wait for the new batch of data next month. So you'd expect the Fed officials be talking up the prospects of higher rates, or not higher rates, but, like we're going to have to do something. It's quite funny, interesting that they haven't done anything about the QE. They just keep raising rates, right? It's almost like they don't want to touch the QE because I know that'll crush the US equity markets. And that's going to give us a interesting picture as we move forward. These little glowing positive days on the US equities, you know what, maybe short-lived. I still expect it to come off quite hard. But right now, we're only seeing a little bit of a dribble off in the equity markets, a bit of a risk-off profile. So make sure you look at that, and we'll try and piece it together as we go through the week. All right, everyone, have a good week. All the best. Cheerio.